Hello, Bitcoin had a pretty big dip today, solidly dipped below 60K, but is this the bottom? We have to note that it basically bottomed out right before Jerome Powell made his speech. And that could be a reason it finally bottomed out, but there are other factors in play here as well. Now, people were afraid of the mighty Jerome Powell's speech. Why were people afraid? Well, because Jerome Powell was expected, some people actually thought he would raise interest rates because the inflation numbers didn't look good. He squashed that like a bug. He basically said, no, we're not going to raise interest rates, but we're going to keep the current interest rates. And there might actually not be any cuts this year, but most likely one or two cuts. So he put that on the table that he wasn't actually going to raise interest rates, and I think that alleviated a lot of the pain. You can see right afterwards, crypto did have a slight bump up, but the stock markets actually gained something like 400 points at close. And at the time of the recording of this video, the pre-market is actually up like 150 points. So my expectation is that crypto will actually follow the stock market and go up a little bit tomorrow. Will it continue to climb above 60, above 70? I'm not really sure. We might actually have to wait for midsummer for that to actually happen. But I do think the worst is over because I think people were getting really, really fearful about what Jerome Powell was going to say. I think they were very, very concerned that he was going to be super duper hawkish this time around. But he was not. He was actually way more dovish than people thought. He basically said, while we're not going to lower rates any, we're also not really going to raise them. And the whole like reverse repo thing, we're going to kind of stop or at least tone down. And that means that QT is slowly going to calm down a little bit. They're not going to take any more money out of the system, which was what people were afraid of. Because interest rates, inflation rates, although they're not down to 2%, they're still at about 3.5, which is a long cry from the 8 or 9% that we were at about a year and a half ago. And they've already changed their plans from a while ago from saying that inflation is very transitory to inflation, you know what, it might possibly stay here for a while, and it probably will indeed stay here for a while. So that's kind of where we are at this point in time. Now, don't really know if that's a good thing or like a bad thing in the long run. I think it's generally a good thing in the long run, but we will actually have to see about that because it's very, very hard to, it's actually really, really hard to tell what's going to go on in the market based on just numbers for 1 month. We need to see a more bigger, broader pattern. And of course, the geopolitical events kind of like screw that up because, like with the situation in the Middle East, with like the Red Sea route getting kind of closed by the Houthis and things like that, it's going to like raise prices and put some prices in question. That's also why gas is a little bit higher right now than it was. And that affects the prices of everything. So it's going to be hard to bring inflation down at this point. He also, Jerome Powell also didn't really want to answer any questions directly. He tiptoed around a lot of things, but he basically said, we're going to keep things as they are. You don't really need to be afraid that we're going to increase inflation, increase the rates, but we're also not going to decrease the rates. And things are basically going to be fairly stable. And I think the whole thing that they're going to tone down or reverse repos, I think that really calmed a lot of people. So that's why the markets went up. I think the earnings reports, they're a little bit sluggish, but they're not horrible. The GDP growth is still positive at 1.6%, still under the 2.4% that they expected. But it's actually kind of good that we're getting kind of an economic slowdown because that would actually get the Fed to realize that what they're doing is working. And inflation will actually come down if the economy kind of slows down. And I think people are afraid of stagflation, but if we look at when stagflation happened, we had inflation rates of over 10%, while interest rates were like double digits as well. So that isn't really that close to where we are right now. So I think generally Jerome Powell calmed people's hearts down more or less and said things were going pretty steady. They're not as good as we want them to be, but they're not horrible right now. And that actually gave people a sense of calm. So overall, that's why the market stopped dumping, and it looks like we are heading up tomorrow. So hopefully 56K was the bottom. Because I said yesterday, like, before I said like yesterday and the day before he speaks, there might actually be a dump again. And afterwards, it might be like one of those like sell the news, like, I mean, a sell the fear, like, but buy like the news type of thing, more or less, kind of like the reverse of buy the rumor, sell the news, because people were just like really, really afraid of what he was going to say. And since what he said wasn't like extremely bad, they're kind of like recovering a bit right now. The other part of this that I really want to talk about is that despite what we just said, the ETF for BlackRock had outflows for the first time ever. Now, that was complicated by the fact that Fidelity and Grayscale also had pretty big outflows as well. But outflows and inflows are kind of like run of the mill for ETFs. It's nothing that strange, but I was hoping it wouldn't happen just yet. Like I said, I think this means that retail is kind of tapped out in terms of buying the ETF, and the institutions aren't ready to come in yet because they still have to finish paperwork and legalities. They'll probably come in end of Q2 through end of Q3, and I'm waiting for that to kind of pump. So the thing is, I don't think that's such a bad thing, but I was hoping that there would just be more BlackRock buys. So BlackRock's ETF saw 37 million in outflows for the first time, while the remaining spot Bitcoin ETFs collectively notched over 526.8 million outflows. And the biggest loser wasn't actually Grayscale. That's the big surprise. Basically, the biggest loser was actually Fidelity, which actually lost 191.1 million, and Grayscale lost 167.4. Now, Grayscale's loss wasn't all that surprising, but Fidelity's kind of was. So basically, we've been losing, I would say, like half the days or the majority of the days since the 25th, and our price really kind of has stabilized or gone down a little bit because of that. So I do expect us to like kind of recover now that the speech is over. I think we will kind of track how the stock market does. So tomorrow I do expect a bit of a pickup right now, and we'll have to like start watching like earnings reports and stuff like that. So hopefully things start to get better, and yeah, and hopefully like the momentum actually continues into tomorrow for both the stock market and the crypto market. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. I will see you guys later.